Hello traders, this video is about the Nikkei 225, the Japanese index Nikkei 225 representing the 225 major stock in Japan. Okay, for all those who are Japanese TST WSYS08 traders, we wish you a very happy Sunday and a happy new week. Okay, tomorrow is the Valentine Day. Okay, so happy Valentine's Day to you all. Now we are looking at the monthly chart, the normal monthly chart of the Nikkei 225. We have noticed that since May 2007, this index was in a downtrend up to 2008, and then we have a bearish season in America and also in the rest of Europe, and then the Nikkei was about to go up during that time in this zone here, and then because of the recession in America and the rest of the world, the Nikkei couldn't continue the movement to the upside and follow the rest of the market to the downside. Okay, so from here to this level here, the Nikkei 225 was following carefully the Euro USD currency pair. It went down and followed the Euro USD again around March 2009 when all the market was going up nicely. Nikkei also followed the Euro USD. The Dow Jones continued the movement to the upside, as we can see. During that time, the Euro USD and the Nikkei 225 went down, and now the euro was going up a little bit. Okay, so this Nikkei 225 is following the euro very nicely since 2008. Okay, now the Dow Jones, in my view, the Dow Jones looks more bearish, and the S&P 500 should pull to the downside a little bit. Okay, at least a healthy pull to the downside. When this Nikkei 225 continue the movement to the outside, hopefully it will survive this time and continue the movement to the outside. But right now, this index look perfectly bullish. If we draw on this chart, okay, this is a technical analysis. This is not a trading recommendation or a trading signal. Okay, this is just a trading discussion. Okay, drawing a trend line on this chart, we can see clearly that the price went down, displaying what we call ABCD chart pattern. ABCD pattern, okay, completed right there. People bought it here. The price start going up. Bear decided to sell it again. If we draw the Fibonacci tool of this session of 2008 down to this level here, okay, traders, some Fibonacci trader, the price was approaching the 61.8 Fibonacci retracement level. I will put the spotlight there for you so you can see clearly what I'm talking about here. The price was approaching the Fibonacci retracement level of the move from 2008, from here, not from here, but from here down to this level here. Price was approaching 61.8. People sold it. It retraced back to the 23%. This is excellent information here. When you see the price retrace to the 61.8, and then it tried to go down, but was stopped at 23%, that's an excellent place to buy. Excellent place to buy. When the price is going up, okay, was stop at 61.8, try to go down, was stop at 23.6. You must look for opportunity to buy right there. That's what's happened, because this is a bullish pressure. People, there is a rejection of the price to go further down this level of 8791. Okay, this level of 8791, there is a rejection of the price to continue movement to the downside. This is a bullish. The bulls are prepared to buy this index at this zone here. The smart money is already in this market in the zone of 8791. Okay, that was since September 2010. Okay, since September 2010, the smart money moved into the Japanese stock already buying. That's why we have this higher low here. The next resistance level is in this zone here of 11,000. Okay, this level of 11,000 up to 12,000 is a resistance zone for the Nikkei. But this index is perfectly bullish right now, contrary to Dow Jones and the S&P 500 and the other stock. The other index also that is perfectly bullish, which I will show you in another video, is the CAC 40, which is the French index. Okay, that represents the 40 stock in France. Okay, but the only two indices that showing a bullish sign is the Nikkei 225 and the CAC 40. Very, very important. So if you want to be completely bullish, you must look for French stocks and the Japanese stock right now, okay, until the market decide to move the price to the opposite direction. Do not assume anything. You must follow the price, and using the TSTWSY S08 to time your entry point. So important that trading is about timing, to know exactly when to buy, exactly when to sell. This is the key for successful trading. When you buy at the wrong time, you know the results. Okay, you want to buy when it is time to buy and sell when it's time to sell. This is the difference between successful traders and those who are still trying to find their way in this market. Okay, so this is technical analysis regarding the Nikkei 225, the Japanese stock. This is the monthly chart. I'll quickly look at my 20 days chart, which is my favorite monthly chart. 20 days instead of the normal monthly chart. This is what we see on this my 20 days chart here. Okay, the price has displayed a nice, so you see this is becoming very clear here. You see it went up, trying to come back down. You see this candle here, and it push it nicely down. You see the angle of for this drawing I had on the normal monthly chart. If I draw on my 20 days chart, you can see that the bullish momentum is clearly here, because you can see the angle of this trend line on this chart is quite steep. Okay, so quite steep to the upside. You see, nice one. Okay, it's very, very bullish on this chart. Okay, the price approaching this zone. Some bear will try to sell. Okay, we'll monitor carefully this zone. But if you want to swing trade, looking for swing trade candidate is the Japanese stock that one should look at right now, because they have been oversold big time in the proper sense of the word. Oversold. The Japanese stock are oversold in the proper sense of the word, oversold. Okay, but we think that the Dow Jones, the S&P 500, the market has reached a point of overbought right now. A pullback, a healthy pullback, is completely overdue, but the market is perfectly highly bullish right now. I don't know who are these people pushing the market to the upside, but our strategy is for day trading the American stock and the European stock and the indices. The Japanese stock, one can perfectly look for swing trading candidate to the upside, but the other indices, one should be looking for day trading opportunity. The CAC 40, which represent also the 40 stock in France, is also showing the bullish signs, but we know that all the major indices try to go in the same direction. Chances that when other indices are going down, other trader will not be prepared to be buying. So we are very, very you need to trade like a pro during this time, watching carefully the market and know exactly what is happening in order to make excellent trading decision. Okay, looking quickly on the weekly chart, maybe some of you would like to see also the weekly chart. This is how the weekly chart looks like. If somebody is looking at the weekly chart, you will see that this is the difference. They will think that this is showing a triple top and whatever, but on a monthly chart it's clearly showing that there is a demand in that zone, and those who are only stopping at the daily chart will see something like this. If you're on a daily chart, what you can do is to draw the channel, which has been developing nicely here. Okay, this channel, if you allow me to draw like a mad person on this chart for you, this is what you will see on the daily chart, price bumping up and down. So if you are on the daily chart, you may decide to wait for it to touch again this trend line here, and then you take it from there. And if it come out on the other side of the channel, you project the channel to the other side again, and do exactly the same thing. Put the middle line again and do your projection. This is about range trading, as we have shown you before in some of our video, how you can range trade, projecting as soon as the price going, comparing the momentum of the price. This is what you do on the daily chart. The channel trading is so powerful on the daily chart. By the beginning of the everything must be the higher time frame that is commanding the lower time frame, instead of making your decision on the 5-minute or the 50-minute chart. That's not the best way to do it. Always use a higher time frame to back whichever time frame you are on. This is the top-down trading method. identifying the cycle, identifying the trend, the strength of the trend, the cycle of the trend, okay, and also backing your time frame with another time frame, okay. This is about technical analysis regarding the Japanese stock and the Nikkei 225. I hope you enjoyed this video, that you put into practice in order to cream the market consistently. We are the TSTWSYS008 traders. Our website is www.stochastic-macd.com. Until the next time, enjoy yourself and be very happy. Thank you for watching, and speak to you very soon.